Good morning, everyone, and welcome to Wednesday morning. It's Stephen Whiteside here from theuptrend.com. Well, this is going to be a very quick little video. We'll get you out of here in under 4 minutes. Today, we've got energy inventories coming out this morning, but then it's all about the Fed starting at 2 p.m. this afternoon. Of course, volatility often expands dramatically after the press conference starts. We've got crude oil inventories out this morning. Both the ETF and the futures contract traded through the upper trend line yesterday. Neither one closed above it, but certainly there's a possibility of a new buy signal for crude oil on Wednesday. Now, it is Fed day, of course, and the US dollar index had a new closing low yesterday. Coming into Fed day, the euro had a new closing high for this move. Canadian dollar still on a buy signal here, not going anywhere at the moment. It would be interesting if we could break out above the February high, but we're not anywhere near that on Wednesday. Then looking at the bond market, bonds have been treading water for the last week. Bond yields, of course, have been treading water, and they could change dramatically depending on what the Fed does this afternoon and how the market reacts to what the Fed does. Now, the fear index, the VIX, is still on a sell signal here, had an inside day on Tuesday, so no change in trend. Looking at the major index ETFs, we had a small pullback on the TSX 60, on the TSX itself. What's still working? Well, energy stocks were up slightly yesterday. Gold stocks closed the day at a new high for this move and had a reversal, but still closed higher on the day, so no change there. What's not working? Technology stocks were down nearly 2% on Tuesday, so certainly no change in trend there. Now, the Dow had an inside day on Tuesday, more significant selling in the S&P 500 and the NASDAQ 100. The biggest loser for the ETFs that we follow on Tuesday was actually the Magnificent Seven ETF, and we'll take a look at some of the tech stocks in a second. We saw a pullback of the Russell 2000 in small caps and micro caps. A lot of inside days yesterday, and certainly a mathematical possibility of buy signals in any of those ETFs on Wednesday. Now, what didn't work? Tech stocks were the big losers. Yes, on the TSX 60, the biggest losing stock was Shopify. On the TSX, it was Celestica. On the Dow, it was Nvidia. Nvidia needs a close on Wednesday below $113.59 to give us a new daily sell signal. That, of course, would be unfortunate. But as you can see, the market did not follow Nvidia up after generating that buy signal. So we've been on a buy signal for a couple of days now, and it could all come to an end on Wednesday. On the NASDAQ 100, AppLovin was the biggest loser. Still possibility of a buy signal on Wednesday. And on the S&P 500, the biggest loser was Supermicro. So we need to close on Wednesday above $42.69 to give us a buy signal there. No love for Tesla. Tesla was down over 5% yesterday, still holding the recent low there at 218.75. Looking to see if that'll hold on Wednesday. Otherwise, we need to close above $259.63. I saw this yesterday. I thought it was pretty funny considering that Elon Musk has basically gone from being Iron Man to the My Pillow guy, which is quite a dramatic move for the richest man in the world. Now, one of the things that the Bitcoin enthusiasts have been touting over the past few years is that Bitcoin would be a great place to hide during economic uncertainty. And that has certainly not been in evidence in 2025. Bitcoin has lost 20-25% of its value since it peaked back in January. Compare that to the price of gold, which seems to be doing pretty well during economic uncertainty, making a new high yesterday, and it is trading slightly higher again in the pre-market on Wednesday morning. Last up this morning, the market is very oversold. We're at the right time and place where the market should bounce. We don't have a lot of enthusiasm so far. We had two up days in a row, which indicates that short covering moved the market up, but we did not see additional buyers come in on the third day. So now we're looking to see how the market reacts to the Fed meeting. If we do get a pop, I wouldn't expect it to last very long. Every symbol has its own levels of resistance on the way back up. And I would expect if we do get a pop that it's not going to last very long, and we should expect a retest of the recent low or even a lower low in the not so distant future. Okay, on that happy note, thank you very much for your time and attention. Next time you'll hear my voice is on Thursday morning, and we'll see how the market reacted to the
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.